Hello, everybody. Can you hear me now? I see there's a few of you in the room. Hopefully, everyone can hear me. We'll wait to see if we get a few more. As you guys start joining back in, just let me know if you can hear me. As you guys start joining back in, just let me know. Hopefully, I reset everything, so hopefully we've got everything working now. Okay, awesome. You guys can hear me. Now, obviously, right now it's saying the stream health is poor. We'll see if that changes. So we'll keep going as long as the stream holds up. All right. So again, I apologize. Thank you for bearing with me, everyone. Had to totally reset the whole system, and now I got the webcam working, the audio working, and we'll get back to it here. So as I bring ES up on the screen, I can see that we are pushing higher as of right now. The first 30-minute candle ended in a doji, right around just slightly higher than opening price. Advancers right over here, still extremely low, about 310 right now. Opened the day at about 155. So it has went up a little bit, but still extremely low. You can see my list over here that I watch. Lots of red. In fact, every single thing on my list is red. Everything. So we will see what happens. I suspect price will probably pull back here in a little bit, but you never know. You never know. They may try to ramp it. Awesome. Awesome. Okay. Hopefully everybody else jumps back on. Let me get back to my other screen. This is my Tastyworks screen. And this is my Thinkorswim screen, which obviously is what I use for my charting and to look at things, because the charting features are much more robust. But on Thinkorswim, I've just been having too many problems with lagging and poor trade fills and that kind of stuff. So I'm giving Tastyworks a shot right now, and I'll let everybody know how that's going. All right, so let's just sort of kind of go through a few things while we wait to see. Let me put an alert up here. And then that way, if price starts to ramp up, we'll know. So I want that up around 246.75. And if it gets up there, it'll let us know. Okay, so let's just start taking a look at a few things. Here's Apple. Okay, so Apple, you can see, had a big gap down. It opened up at 281.90. It's currently at 286.05 and has been as high as 287.89. So we had the big gap down. You see this huge gap right here. Then price went up, got almost up to the 288.32 level, not quite, and now it's pulling back. Here's Amazon. Same thing, gap down, right up into resistance. Right now it's sort of stalled out at the 1897.25 level, right around there. So we'll see, is it going to pull back and reverse, or is it going to be able to push higher? Here's Boeing, BA. Same exact thing, gap down. It actually flushed down at the beginning and is trying to go higher now. So it opened at 253.70 and it's at 256.59. BABA. Let's take a quick look here at BABA. Okay, so BABA is doing exactly the opposite. Gap down and it's going, a gap and go. So it gapped down, opened at 206.70, and it's already down to 203.91. So it's going the opposite way. Obviously a China name. Let's look at Baidu. So Baidu gapped down, came all the way down here. As you can see, it like literally within a penny. Actually, when a penny passed our support level, then bounced. Now it's up at the resistance level at 116.18. So that's Baidu. Let's just keep going through here. We'll pick out some other names to look at. Let's take a look at Facebook. And if there's anything you guys want me to look at, just type it in the comments, and then I will I'll look at it for you. Okay, so you're seeing the common theme here, right? Almost everything we look at has gapped down, and then most of them are trying to push back higher. So Facebook opened at 178.33, currently at 180.79. It's got resistance above at 182.01. All right, gold. Well, we've got GDX and we've got the gold ETF. We'll look at GDX first. That's the miners fund. So it actually did the opposite. It gapped up and it's selling off. You see that? So it opened at 29.95 and it's down to 28.82. So it gapped up, sold off. Let's look at gold. Okay, gold, same thing, gapped up, but it gapped it up right into resistance, right here. 158.53, boom, selling it off. Okay, Google, take a look at Google here. Okay, still don't see anybody wanting anything in particular, so I'll just keep going through some names and then we'll flip back to the market here in a minute. Google, gap down, opened at 1272.13, currently at 1278.95, which is obviously not very much of a move for Google. Has resistance above at 1287.30, which you can see we've got the gap down again. All right, let's go back and we'll look at the market real quick. Market looks like it's still trying to climb. Yep, so it's up there testing the 29.4675 level right now. Okay, so obviously we talked about this a little bit in the room this morning. Economic data didn't really matter if it was positive or negative. You just wait to see what they're going to do with price. So it came out at this candle right here. Obviously, they put on a bunch of jobs, but it really didn't move the percentage that much. Okay, the unemployment rate only fell from 3.6 to 3.5. However, they put on 273,000 new jobs. We got a spike up, then they pulled it back. Then over here, they flushed it down. Then we had the doji. Now they're trying to ramp it up. And we're getting close to the 20 SMA on the 30-minute here. Okay, so we're going to see what they do. Is this a legitimate spike? Or is this something where they're going to take it up and then pull it back? We don't know yet, right? We got 3 minutes left on this candle. So we'll see what they do with it. What I'll do is I'll put another alert up here at our next level at 29.60. And then we'll know if they keep ramping it up there. RJ, I see you said SPY's jumping. Yep, just like SPY. Hey, Martin, nice to have you. Yep, I'll definitely take a look at Tesla in just a second. All right, let me put this alert in, which it's already almost up there. Okay. Within a couple of ticks of our 2960 level. There it is. Alert just went off. So you can see now we're all the way up to 2960. This candle started at 29.29 and was as low as 29.22.25. Okay, so getting a nice little ramp right here. And we've got about a minute and a half left to go on the candle. Put an alert up here at 29.75. And I will look at Tesla here shortly. So no worries there. All right, so we'll let that keep ramping if that's what it wants to do. Let's go take a look at Tesla. All right, here's Tesla. All right, Tesla, gap down, tried to go up, pulled back. Right now it's trying to go up. It opened, I'm sorry here, 691.80, and it's currently at 701, 700 to 701. So not a real big move on Tesla so far. But just like a lot of the other popular names, gap down, and now it's trying to go higher. Vancers at 410, which is still the extreme bullish area, bearish. But we know how many names gap down and they're working their way up. So that's why that number's deceiving. That's how the market can be going up, even though the advancers are so low. Okay, the market's still hanging out right around the 2960 level. We'll see what it does there. Let's look at a couple of other names. Let's look at AMD. Okay, AMD. Okay, so they gapped up and then sold off. You see that on AMD? Gapped up, sold off. Now they're trying to move back to the upside. Let me remove this. Okay, that was yesterday's opening price level. So they opened up way up here and then sold off all the way down here, and now they're trying to make a move back up. So that's AMD. RJ says VIX hasn't been this high since 08. Yep. The other day when we were on the live stream, I told you that somebody that I know, that I follow on Twitter, about 2 months ago was telling the people that he knows, he was like, buy, 35 VIX calls. He's like, buy 30. He goes, I guarantee you VIX is over 35 by March. And he was right. So got to give credit where credit is due. Okay. Disney. Yep, I'll take a look at Disney. Huh. Disney has fallen so low, it's underneath my levels. Okay, so they gap down and they're trying to push back up, just like a lot of names, right? Gap down, pushing back up. So while you guys are on here, I'm going to draw some new levels. I don't trade Disney much. I'm just not a fan of Disney. Doesn't mean that you shouldn't be. All right, so let's draw some levels. I got to get my price line tool. Go to the 4-hour chart. Get my price line tool. Start at current price, and then we're going to work to the left. We're looking for bigger moves or sharp pivots because this is so close to this one. We'll ignore that. I would probably put one right here. We're going to adjust this one. I haven't been on here in a while. Okay, so we're going to move this one right up here. All right, and now we're going to scroll back. Those look okay up there, but what we want to do is see if we can find some lower levels. Okay, price is currently at 113, so we've got to go back far enough. There we go. All right, yeah, so we got some levels down here. So we need one. I'm going to ignore that one for now. We're going to put one right here. Okay. We're going to put one right here. And right here. Get that to stick. Okay, now we're going to switch back to candles. RJ, I did not listen to him. I see your comment there. I did not buy VIX 35 calls out into March like he said. You're absolutely correct. I don't trade the VIX that often. Okay, so here's where we're at on Disney. So you can see now that I added the levels in, you can see that it gapped down right into a support area, which I've told you guys before. I said it on the live stream, and those of you who are in my community, if they gap it down right above support, that's generally a good sign. Doesn't even matter what's going on. Usually right out of the gate, then it'll ramp up off of there. And that's exactly what's happening with Disney. You see that? They gap down right into a support level, and now it's bouncing back up. All right. Okay, I'm just keeping an eye on ES off to the side here. See, it's right up here, so I always know what's going on. It's pulling back just a little bit, 29.53. Here, I'll just go ahead and bring it up so we can see it. Okay, there you go. So pulling back just a little bit off of this 29.60 level. Wouldn't be surprised. We'll see what happens, but wouldn't be surprised if it pulls all the way back. But you know, who knows? Who knows what they want to do with it? We'll watch it here for just a second. Okay, looks like we have a nice crew with us. So everybody who's here, welcome. If you can, if this is your first time, go ahead and give us a thumbs up, subscribe to the channel, and then turn on the notifications bell. And that'll help you because you'll be notified every time we go live on a live stream or when we upload new videos. So if you guys could do that, that would help me. Obviously sharing our channel, sharing this feed. All you have to do is click the share and it'll give you a link. You can share that with others that you think might be interested. I'm watching the comments. I've got the comments going on my feed right here. So if anybody has anything they want me to look at, just let me know. Okay, so right while we were talking, you seen what ES did. It pulled all the way down to the 29.4675 level, caught a little bit of a bounce. So right now, just sort of trapped in between these two levels right here. Okay, we're way early in this candle, so you know we're going to see where it ends up. But hypothetically, if it ended up kind of where it's at right now, that would be a bullish signal, right? Because we've had this strong move up. Then if you got a resting candle in the top 25 to 33%, then you would look for a continuation. If this ends up more as a red candle, you know, where the most of the body is red, then we would start looking for possibly for it to roll over and head the other direction. So, but it's way early. We've got 22 and a half minutes to go on this candle. This is a 30-minute chart. Okay. Ah, nice to have you here. First time. Awesome. Awesome. So, how do I trade? I'll give you a little bit of a background. So, I trade using support and resistance. That's what these lines are. And if you were just on here, you probably saw me drawing them in, drawing some new lines in on Disney. So, I'll trade from support to resistance. I use supply and demand, and I'll come up here and show you. Well, here, let me do this. I'll switch to a higher time frame. Let me go to the 4-hour. And I haven't drawn all of them in as of right now, but these pink areas up here are supply areas. There was actually one right here. As you can see, we came up to it and had some trouble getting through. This is supply right there. I've already removed it. That was pink at one time, and we kind of got through, then came down, then came back up, and now we've been working our way down again. Okay, so I told everybody in our room last night and yesterday that 29.75, let me kind of zoom in. So 29.75 was this level right here, and I told them if we didn't hold, we were going down, and I gave two targets. I said we would probably at least get to 29.2850, which we did. And then the other possibility was that we would come all the way down to 28.8350. And we still might get down there. I mean, who knows? And then if that wouldn't hold, then we're talking about a more serious drop. So let me kind of show you. Let me squeeze this in. Well, in fact, let me go to the daily. That'll make it easier. Okay, awesome. I see where you said you watched the video on how to draw them. That's beautiful. Okay, so here's the daily chart. All right, here's the daily chart on ES. Okay, so we've already been down testing this level right here, right? And we did catch a bounce. Now, we're coming back down. And if we get through, this is down at 28.6025. If we get through there, then we start to fall. Let me squeeze it up a little bit. Okay. Now there'll be points along the way, like right in this area, maybe right over here, maybe right over here. But we can really start to fall if we get through the, what did I say, 28.60? So let me come back over. Stretch this back out. Okay, we're on a daily right now. We're on a daily, just so you know. Okay, so up here was the all-time highs. We've been in our market correction. Boom, sold off. Caught some support right here at the 29.4675 level. Worked our way back up. Now we're working our way back down. So, see, when you look at these higher time frames, it gives you a better overall picture of what's actually happening. So whenever you're thinking about taking a trade, you definitely want to check the higher time frames. The monthly, the weekly, the daily, the 4-hour. You want to check those no matter what time frame that you trade on. Okay? So that this gives you a better idea. On a daily or a 4-hour, okay, so we saw, right, look at this, there was the correction, the sell-off. Then what did we have? We had a hammer right here, okay? Then the next day we gapped down, but when we took the top of that hammer out, that was a bullish sign. And then we got all the way back up to 31.37, right? Then we came down again, came back up, and now we've been selling off. And then we got down to this level right here, which was 29.0625. That's as low as we've been. And then price caught a bounce. Now look, if you look over here, you see this candle. And if we go to a 4-hour, let's go to a 4-hour. It might even give us a better picture. Okay, let me zoom in. All right, so, yep, look at this. See this wick right here on this hammer? Look where we came down to, right down here. All right, and what do we know when we have a long wick? I call them a bottoming tail. Okay, we know that there was aggressive buyers right there, and aggressive buyers. They pushed price up, and then look, it went all the way up to here. So that makes sense that when price returns to that level, that we'll at least catch a bounce. Okay, and that's what we're doing right now. We're catching a bounce. We got down here, we're catching a bounce. Now, you can take this overall move to the downside, divide it in half, and there could be a good chance that we get back about halfway and then start back down again. Okay, that's if we're bearish, right? That's if we're bearish. Now, if you took this whole move and you divide it in half and you get above it and you get up to about the 66% point, you break above that and hold that level, then that's a bullish sign that you might continue on up. Vice versa, if we only make it about 33% of the way back up on this entire move down and then start back down, that's a bearish sign. If you can't even reclaim or retrace 50% of this entire move, that's a bearish sign, right? Most likely then we would head down and make an even lower low. And then we have another wick right here at the 2860.25 level. Okay, so if it would retrace back down here, there'd be a good chance we'd catch some sort of a bounce or support right in that level as well. And we'll probably catch support at each level on the way down, but that could just be price stalling, you know, kind of up and down a little bit, then it goes on down. Okay, but it made a lot of sense where we caught support because of this big wick, and then we have another one right over here. So let's see what happens. We're currently at 29.68 is where we're at right now. All right, so I'm going to go back. Let me go back to the 30-minute, which is the time frame that I'm on most of the time. You see we went right up to 29.75. Okay, infamous, or however you pronounce it with your X in there. I always recommend that you draw the support and resistance lines on the 4-hour time frame, 4 hour. And then you switch to a line chart. So I would go, I already have these lines drawn in, but let me just show you. So you go up here, you switch from a candle to a line chart, and you zoom in. You start at current price, okay, and then you would work your way back. Now, as you can see, the levels I have drawn in are still working. I really don't need to do much adjusting right now. I adjusted 2 days ago and added this line up here, 3054.25, and as you can see, it's been respected. Like if I switch back, let me go back to the candles, and back to my 30-minute. Doesn't matter what time frame you trade on, use the 4-hour to draw your lines in. They're much more consistent. I've just found through a lot of time, practice, study, experimenting on higher time frames, experimenting on lower time frames, that the 4-hour is like the most consistent. That's why I use it. Okay, so right up here, this was the new level I drew in a couple of days ago. And on the 30-minute, look at this. You see that? How it's been respected? 1, 2, 3, 4, 5, 6, 7, 8. You could probably say 9, 10, 11, 12. I mean, just in that little area there, it was respected 12 times on the 30-minute. Okay? Okay. All right. So you see we came up, we tested, but we really didn't break through, right? Because I have an alert set. The alert would have went off if we would have broke through. So we went up and tested the 29.75 level. I see BA is going green, so let's see what BA is doing. All right. So it gapped down, and then it's been pushing up. Here's where it closed yesterday, so that's why it's green now. It's back up above where it closed yesterday. Okay, and we look over here, our advancers are still climbing slowly. Remember, we opened the day at like 155, which is like off the charts low. That meant there was only 155 names that were technically advancing. That's why you say it's extremely bearish. And now we're up to 500, which is still in the extremely bearish range. 800 and below is extremely bearish. 800 to 1200 is bearish. 1200 to 1600 is neutral. 1600 to 2000 is bullish, and anything over 2000 is extremely bullish. So those of you who may be new, you're welcome. Infamous, you're welcome. Okay, so let's look down through here, see if anything catches our eye. Okay, Google. Let's check out Google. All right, Google's still struggling right here at this 1287.30 level. It's above it, but you can see it started up and then it pulled back. Now, is that a break, a retest, and go? We don't know yet. We got about 11 minutes left on this candle, so we don't know if that's what it is. We know it's a break and a retest. We just don't know if it's going to complete the pattern and go up, right? It may end here, and the next candle may start and then go higher. Or the next candle, obviously if we ended in a spinning top, that's indecision. However, it could also be a resting candle because we had this nice big wide-ranging green candle to start. And then if we get a resting candle and you take out the top of this wick here, you're generally going to get about the same sort of move that you had right here. Okay, so that's sort of a scalping technique. Okay, I'm just constantly checking back to see if you guys have any questions. Okay, so we just broke above 29.75 on ES. Just barely, 29.75.50. But that was my alert going off. All right, let's look at a few other things here. JNUG. See, gold, you almost can anticipate these things. So like I know Market Watch and some of the other news feeds this morning were touting gold. And what's gold doing this morning? Selling off. So they put out news releases about, you know, gold is strong. Gold's as strong as it's been in, I can't remember how long it said. And then what do they do with it this morning? They sell it off, right? So they get all the retail people whipped up into a frenzy. Gold is strong. Gold is strong. And, you know, people may have bought at the open. And look at this. Just right here's it gapped up when everything else was gapping down. And boom, just flushing it. It's down $9.43. So that's what they do. I tell everybody in our community, and if you're not in our community, we'd love to have you. Go to simpletradinglife.com and click on the chat room button, and you can join us in the chat room. But I tell them in there all the time, at market open, it doesn't matter what the news is saying. It's irrelevant. The news is irrelevant. The things that are important when it opens, where does it open? Like right here, they opened right in the middle of support and resistance, which means it's got room to move either direction. All right. If they open up right under resistance, it could even have good news. And typically what it's going to do at the beginning is it'll sell off to begin with. Or if they open it just above support, no matter if the news is bad or not, generally what's going to happen is it'll bounce and catch a bounce. And if you ever find that 90% of the thought process on one particular name or on a sector, like in this case, gold, is one direction, you can almost bet that they're going to take it the other way. So like this morning, like I said, all the news outlets, gold is so strong. Gold's making, all these highs, and gold is where you want to be, right? Because what have we always been taught about gold? Gold goes up in uncertainty, right? Or if the market is weak. Well, the market is definitely weak right now. With the coronavirus and oil and things like that, there's a lot of uncertainty in the world. And so everybody out there, or 90% of the people, they get whipped up into this frenzy of, well, gold has to go up today, and then that's why they sell it off. That's why they sell it off. Okay, so in fact, let's do this. Let's go back. Let's look at GDX. All right, I'm going to show you 3 different gold names. There's GDX, same thing, right? Just like JNUG. JNUG's gold, GDX is gold. Look at this. They open it up in between, sell it off. Okay, now let's look at gold. This is the gold ETF. Without even looking at it, I'm sure it's going to be almost exactly the same. Look at that. Okay, in fact, they opened it up right in resistance, which that probably would have led to a sell-off at the beginning anyway. But just like all the other gold names, look at this. Just boom, flushing it. Now it's trying to get a little bounce down here, but that doesn't necessarily mean that it's going to reclaim, back up here. Okay, ES pulling back a little bit from the 29.75 level. It's at 29.69. We'll just take a look at it here real quick. Okay, anybody in the room, if there is something that you want to look at, I still have plenty of time here. Okay, so we got up to 29.75. Now that was the key level on the way down. And look at this here. Okay, so look at this range overnight. I told everybody in my community that was the key level. So look, we had this big sell-off. And then starting, let's see, was that about 9:30? Yep, 9:30 last night, all the way until 4:30 this morning. We just sort of ranged. We came down here. We kind of bounced off of 29.75, bounced off of 21.91.25, back down, and then finally flush. Okay, once it went all the way down to here. Then we caught some support right in through here. Then it dropped all the way down to 29.06.25, and now we've kind of been working our way back up, and we got back up to 29.75. So I always use common sense, right? And I tell everybody in our community, use common sense first and foremost. If this was a tough level to get through on the way down, what's that tell you when it's coming on the way back up? Right? It should be, we don't know that it will be, but it should be sort of tough to get back up through. Okay, we don't know that for a fact, right? Nothing's 100%. But once you break through support, it then becomes resistance. Now, we've got up to it. We've kind of pulled back a little bit. We'll see. Like, we can extend this. Give me 1 second, and I'll extend it. Okay, we'll extend this over to give you a little bit more visual. Get it down there. There we go. So you can see now we're coming not only into a level that was support, we're also coming into a structure level. Okay, this is a level of structure. So typically when you pull back, you're going to get to a level of structure. You're probably either going to stall out or maybe even start to bounce back down. Now, let's look here. Let's do some quick math. All right, so the high there was 30.34. Give me a second. 30.34.75, and we know that our low, minus 2906.25. That's $128.50. We're going to divide that by 2. Then we're going to add it to the low. And guess what that gives us? 2970.50. All right, so 50% of that move is right here about the bottom of this box. Okay, so this move right here, from there to there, right here to down here, because this is really where the downside move started, was right here, right? Because this was a green candle. So this is where it started, all the way down to here. 50% of that move is right about the bottom of this gray box. So we've already retraced 50% of the move. And as of right now, what is it doing? It's pulling back, right? Came right up to it, came right up to our 29.75 level, which is right here in that level of structure, and it's pulling back, all right? Will it pull all the way back and make a lower low? We don't know that yet. But we do know that there has been a reaction right here at the 50% level. It happens over and over and over again. Okay, give me a second here. Just checking messages. Okay, so you were asking about the support and resistance levels. If I just switch this over, now I'm not going to go to a 4-hour. I'm just going to leave it on the 30-minute just to answer your question. All right, so on an up move, it's obviously going below, just below where it touches. And on a down move, and what we really want to find are bigger moves or sharp pivots, okay? That's a sharp pivot right there. Okay, right there. That's a sharp pivot. And you can see now our line, our level is drawn from back in the past, and it's still being respected. So we don't adjust them or eliminate them or, whatever, add new ones until we need to. On my charts, I tend to do that about every 2 to 3 days. And then, if a level is being ignored, and what I mean by being ignored, give me 1 second. I can probably give you at least an idea. Okay, so if we get, okay, see this candle right here. Now we know this level's being respected because of these candles. But let's say we get 3 or 4 of these in about a 2-day period with no other candles respecting a level. So that means we just keep blowing through a level, 3 or 4 or 5 times in like a 2-day period with no other candles respecting it, then I just eliminate that level. It's no longer valid. All right, but right now, this level's still being respected. See this? Rejection, rejection, rejection. Okay, now this time we went through it up to this level, but what I'll do is now I'll watch over the next couple of days. Let's say price starts to come back down. Does it just blow straight through it, or do we respect it? Okay, so that's kind of how you know where to place them, and you know how to move them if you need to, or eliminate them. Okay, so we just started our new candle. Now we ended up with a spinning top here. That's a pretty big spinning top though. Long wicks, long legs on it. All right, so are we going to continue higher? Are we going to try to force our way up through this structure level? Or we're at this 50% level now. Are we going to kind of stall out and then start to roll over and head back down? It's kind of early, so we don't know. It's 11 o'clock. What I mean by early is we've only tested this once. The folks from my community know on a 30-minute time frame, if you test a zone like say 3 times and don't get through it, especially I'm trying to give you a visualization. If this wick would penetrate a little bit further than this one, and then the next candle, it comes up and touches it, but it's a little bit lower than this one, that starts to show you that the market's starting to roll over. All right. Now this candle may just turn red right here and start the other way because this is a candle of indecision. Even though it's green, we got a tall topping tail and we have a long bottoming tail. So that shows us that both ways they're fighting. Sellers are trying to fight down, buyers are trying to fight up, and now you're going to see who's in control. Okay, right now the candle's starting to go red. Yes, absolutely. Absolutely, I will short at a resistance level, at a structure level. You're asking structure. Absolutely. If you get a buy signal, and I'm just checking the messages. I got alerts going off here. So for me, I love shooting stars, okay, like this here. See this one? And look at all these rejections. Now, I knew, again, this is something you would learn over time. I knew that this, however, was sort of a range, sort of like a basing area. And what we mean by a basing area is, if you know anything about supply and demand, and if you don't, that's okay, because we'll teach you over time. We have a drop, base, drop. Okay, that's terminology that comes from supply and demand. So here, sellers were in control, more aggressive. They drove price down. Then you're sort of in an equilibrium right through here. So they call that a base, a basing area, or some people call it a resting area. Okay, then we dropped again. So that's called a drop, base, drop. But that's still a level of structure as well. Okay, so if let me zoom in a little bit. Excuse me, zoom out. I'm sorry. All right. So let's look at structure. So we started this move, the bigger overall move way up here. We come down, okay, lower low, lower high, lower low, lower high, lower low. Then we went slightly higher high, but to change momentum, you need at least a three-legged move. And I like more than that, but some people, and what I mean by a three-legged move would be higher high, higher low, higher high. That's a three-legged move, okay? But we got a slightly higher high, but then we made a lower low again. So we're still in the downtrend. I mean, you can see it, but in real time, you've got to be able to identify what's going on, right? We have all the info right now, but if I would cover that up, if I would cover up part of the screen, let me scroll over like this. Just scroll over, okay? If this is all you know, this would have been real time. What we know is we made a lower low, lower high, lower low, lower high, lower low. Then we made a slightly higher high. Okay, at that point, I would not personally be convinced that we're moving back up yet, that we're in a trend. All right, so then as I start bringing some more candles on, look at the very next candle. Right? Completely took out this big candle. Go again, look at this. All right? So I always tell everybody that I teach, you have to know the overall context of what's going on. You have to know the overall context of what's going on. So up until that point, the overall context was saying we're in a downtrend. And just because you make one higher high, that doesn't mean, think about this. You break this level right here, which is 307425. You break that level and you're like, oh, well, we just made a higher high. I'm going long. All right. Again, let me bring it back over. Hang on one second. Okay. So let's say that that's what you're looking at. And you make one higher high after all of this structure on the way down, and you say, oh, well, we made a higher high, I'm going long. And you get long, and then the very next candle does that. And next one, and the next one. You get this huge sell-off. after you just went long. Now, hopefully, you had a good stop, a good protective stop, and you only lost a little bit. But if you didn't, because you were convinced that price was going to go up, then you would have been crushed right there. And that's not what you want. Okay, so let's continue down, right? So then we made a lower low, lower high. We'll keep moving here. Then we made another lower low. Then we made an equal high. All right, equal high. See that? Then we made another sell-off. Then we start ranging. And again, in real time, you don't know any of this yet. But after about 4 or 5 or 6 candles, you know you're ranging. Okay, you see that? Kind of flattened out. We took a little dip, but then we came right back, but then we stalled here. Right back down. Okay, see this? You should definitely know by right there that you're ranging. By this candle right here, you should know you're ranging. So then, at that point, that's why I draw these boxes. These boxes are visual representations to help you make better decisions. So now that I know we're ranging, if I'm trying to trade this, what am I thinking in my head, right? I don't want to do anything unless I get a strong break up out of this range or down out of this range, right? Because I don't want to get trapped one way or the other, especially in this market volatility. Okay, so we move a little bit more, and there's the strong break. Okay, there's the strong break. So somebody who was looking to trade to the short side, when you would have cleared these 2 candles, you could have went short with a nice tight stop. And look at the move you would have got. Okay, you probably would have exited down around here, because what did it do? Then it started to base again. Okay, then it started to base. Then we did make a little bit further drop, but you can see these candles are different, right? Smaller, they got longer wicks, went up, went down, went up, went down, and now we came back up, and then we're back to current price. So let me scroll back in so you guys have a better picture. There we go. Okay, and so in just in those few minutes I've been talking, what's the market doing? Right now it's selling off. So we came back up into structure, which also happened to be the 50% retracement of this move. Okay, you start putting all these factors together. Okay, 50% retracement of this move, I told you, is right here at the bottom of this gray box. We came right up to our resistance level at 29.75, which happens to be in the structure zone. And then price sells off. Okay, right now, it's not even stopping at the 20. The 20 you would think would act as some resistance. We'll see. Maybe it still will. Okay, now it is. Now it's sort of giving it a little bit of resistance. Now the 20, this is the 20 simple moving average. It's not going to be as strong as the 200. This is the 200 up here. So this is showing you the average price of the last 20 candles. This is showing you the average price of the last 200 candles. So you're going to have a little bit of resistance usually from the 20. But the 200 a lot of times will act like these support and resistance levels do. Okay? But you can see how you just line all this stuff up, and the more factors you can put in your favor. What's another factor that you could put in your favor? We're obviously in a downtrend, right? We just looked at it. We just looked at it. If I scroll back in, right? So let's do it again. Lower low, lower high. Lower low, lower high. Lower low, slightly higher high. Lower low, lower high. Lower low, equal high. Okay, equal high. Lower low. And then we base here Okay, so you can say right here is another lower high, lower low, all the way down to here, and still this is a lower high, right? Because we would have had to get all the way back up here and take this out, and we didn't even get close. Even though that's a strong move, and this is where a lot of people get confused. They'll look at this move. Remember, we're in extremely volatile conditions right now. Extremely. Okay? So you have to compare this to all this structure. All this structure. Right? So yes, that's a pretty strong move. But we didn't even take out the next level. Right? We didn't even make a higher high. We got right up here and started back down again. So that's another lower high. And we'll see, does the trend continue down? And if it does, then what you're looking for is, are we going to start ranging through here? Or is price going to continue to move down and make another lower low? Right? Let me, I'll scrunch that up so you can see. So we need to get down to like 28.9850, 28.8350, and then 28.60, that's that key level I showed you from before. If we get down there and break and hold that level, so break and hold means we break through it and we continue to hold it. Sometimes you'll break through, you'll pierce it, but then by the end of the candle, it comes back up and it'll close above it. So when I say break and hold, that's what I mean. You break through a level and then the candle closes below it. So if we would get down to 28.60.25, break through, hold that level, then that really opens up some more possibilities for some significant downside. That is really not something that anybody who has any bullish bias, I have no bias, I only trade price action, so I'll trade bearish or bullish price action, doesn't matter to me, make money both ways. But if you're bullish, then that's something you definitely don't want to see. Just like you didn't want to see 29.75 break, right? Look, when we broke it, we dropped way down here. We came back up to retest it, but now it looks like we're going lower again. That was a key level, and I pointed that out in the room. Okay? There's certain levels that are really important. Another level, if you're a bull, that's important is 31.05. I told everybody in my room for a long time about that. So let me do this. Let me go to a higher time frame. Maybe, let me try the 1 hour first. That might not even get me there. Let's see. Let me see if this will work or not. I'm going to go to the 4 hour. Give me a second. Okay, so when we got down here, all right, so here's where it all started, back here. And look how we just keep gaining momentum, gaining momentum, gaining momentum. Then finally, we caught a bounce right here. Well, there was some folks in my community who were like, okay, does this mean that we're moving back up now? That we're going to go into an uptrend? And I kept telling them over and over again, the key level is 31.05, which is up here. Okay, you see how we were kind of making this this circular pattern? Okay, and I even told them, I said, this may try to develop into a cup and handle. And it tried, but it rejected. You see that? If you know what a cup and handle is, look at this. Okay, here's your cup. Then it comes around, all right? And then here's your handle. In a typical cup and handle pattern, if you break through here, then you could shoot on up. And I told them we might be able to shoot on up here if it broke through, but it rejected. And then sell off. Okay, so that's how I know that that's a key level right here. Okay, that's how I know that's a key level. All right, I also knew that 29.75, which is right here, was a key level. I said if we break that, we're going to all of a sudden drop on down, and I gave them two numbers. I gave them 29, 28.50, and 28.83.50. Okay, I said we would most likely hit one or both of those numbers if we broke 29.75. Well, we've already hit the 29.2850, and we, if price starts to reverse down, then I think 28.8350 would probably be pretty highly probable. Okay, all right. Let me look here. Okay, you're welcome. Welcome. Saw you saying thanks there. Again, if you guys are new, first time that you've been in here, first time you've heard about the Simple Trading Life, you can go to simpletradinglife.com. All right, that's our website. Learn a little bit more about us there. And then there's a free chat room button. You can click on there and join our chat room, our Discord chat room. And we have a lot of free resources in there. We're also launching a premium room, which we'll probably have a link up later today, and that's going to launch on Monday. So if you want to join that, there'll be a lot of trade alerts, trade ideas. I don't like to call them alerts, trade ideas, and I give you like both scenarios. I'll tell you, hey, here's one scenario to the downside, or if price starts to go the other way and gets to a certain point, you could also look at upside or negate the trade, meaning you just don't take it. So I always try to give both scenarios because that's smart, right? People who only give you one scenario and they say this is absolutely what's going to happen, I think they're being a little bit short-sighted, and they can get people into trouble because people will blindly follow that, and they'll jump into a trade long or short that only has one scenario, one direction, one opinion, and then it goes against them and they lose a bunch of money. Again, unless they have really good risk management, which you should. You should always have good risk management. Okay, so we're still here on the 4 hour. Okay, see the 4 hour candles, again, tell a better story. Look at this candle, all right? It's not going to expire for about another hour and 40 minutes, but you can see, look at the range on this. It came all the way down here as we sold off, then it pushed all the way up here, and now it's pulled back all the way down here. A lot of range. I mean, this candle within, excuse me, an hour and 40 minutes, this thing could end up almost anything, right? Could end up as a shooting star, could end up as a green candle if it pushed back up. If it really sold off, it could be, it still would be a shooting star. If it really pushed this way and sold off, it would still end up a shooting star. Just everywhere you see green would be a wick, right? Because at one time when we were clear up here, this was a big, wide-ranging green candle. Now it's almost back to being like a spinning top, and if it keeps pushing down, it'll end up as a shooting star, which is a bearish candle. And when you see a shooting star in a trend, in a downtrend, now this one right here, this isn't really a shooting star. Okay, a shooting star, the wick needs to be at least 2 to 3 times the size of the body. Okay, but let's just say that was a shooting star there. It's not. If it happens in the middle of the trend, it's known as a momentum shooting star. Some people call them a momentum shooter. All right, that's showing that in the trend, bulls came in and tried to push up, and the bears said, no way, no way. And they push back down, and that continues the momentum in that same direction. All right, let me go back to the 30-minute. And we'll check out a couple of other names while we're thinking about it. Okay, look on the 30-minute here. Look at this. So we came up. We came from all the way down here. We came up. Now we're selling off. We're back to the 29.4675 level. If that would break and hold, the next level down is 29.2850. And really, look at this candle here. There wouldn't be much to stop it if it gets through here. Okay? This wick right here is it's what's slowing this down right now. That's why it's come and it's kind of bounced off of here a couple of times. If it gets below this wick, maybe down into here, you'll probably see it sell off pretty quick down to this level because there's nothing in here to stop it. Okay, so we'll keep an eye on that. I'll set an alert so we'll know. Okay. All right, I'll set an alert. That way we'll know if it gets down here. All right, let me look. I'll see if anybody's got anything here. Not as of right now. Okay, so I'll hang out for just a little bit longer. And let's go back. Somebody had asked about Tesla before, so let's see what Tesla's doing. Okay, see Tesla, gap down, pushed up, now it's rolled over and it's been selling off. All right, so it opened at 691.80 and it's currently at 692.47, so it's pretty flat on the day, but you can see where the momentum is right now. Momentum is to the downside. Tried to push up, just couldn't do it. Rolls over, it's heading back down. What about, I'm going to look at Regeneron. Okay, so Regeneron, as you can see, was going back and forth here in this little broadening triangle. I can go ahead and pretty much remove that now. Once it broke above, look at this, boom. Got above this broadening triangle and just shot right up to this next resistance level. Then it's kind of sold off back to the 20, right? Maybe I'll leave it on here because sometimes what it'll do is it'll come back and then it'll use this as a range, like this, until it breaks out. So I'm going to leave it on there for now. But this is what's known as a broadening triangle. Sometimes they last a long time and it'll show you an expanding range. And that's good to know because if you're good at identifying them, and let's just say ignore this up here. Let's just say when it bounced here, you know that when it bounced here, it came down here. When it bounced here, it came back up here. So on and so forth. Well, then there's a pretty good chance it's going to come down here, and then there would be a pretty good chance that it's going to come up here. All right, so that's why you draw them. You can see an expanding range. But if they break one way or the other, like they did here, they break and hold, well, then you're looking up at your next resistance levels, or down here, your next support levels. Okay, so that's Regeneron. Let's look at Netflix. Look at Netflix. Look at this. Up, down, up, down, up, down. Netflix has been really volatile during this market correction. So it keeps trying to push up and then it gets beat back down. Then it pushes back up, then it gets beat back down. So it's definitely, right? It's definitely in a range. I mean, you could say up around here's your top, down here's your bottom. Let's go back even a little bit further here. That's as far back as it's going to let me go on a 30-minute. But, so from here up, back up, about halfway down, back up, all the way down. So it's been in this range now, and that's a pretty good range. 357 up to 393, 392 up in here. I don't want that on there. Let me get that off of there. Okay. So that's Netflix. If if this is one that you trade, you should be able to start figuring these out, before you see the rest of this. Okay. Let me do it like this. Stretch this out. Come back over here. All right. You start seeing this kind of action, and look what we have here. I can draw it in for you. All right, we have a broadening triangle, don't we? Okay, you don't have to be exact. All right, you see this? Down, up, down, up. And then we know that it came back down, right? Okay, it broke above. Let me extend this. Broke above, but it came back in. And they'll frequently do that. They'll just barely break out of it, and then they'll come back in. Then it came back down here to this level, and then it came back up. Look, almost to the top. Then what did it do? Came back down, back up, back down. All right, so you'll get good at trying to identify this kind of stuff, and it'll help you make good trades. Okay, Todd Father, I think that's you asking the questions there. Let me go back. He's asking, what would I be looking for if I was going to take a trade on the market today? All right. Typically, I like shooting stars, hammers. I like dojis or spinning tops if they're smaller. This one's a little bit big for me. I mean, now it's likely, like I said, if it gets down to about right here, it's likely to just go ahead and flush on down. I'm not going to take that trade, but I'm telling you it's highly likely. It's highly likely that that's what's going to happen. If this would have been smaller, if this would have been like, say, a spinning top right here, and then I could have entered maybe like right there, and then this would have been my target, that would have been something I would have been interested in. If this would have been a shooting star off of here, then I would have looked to maybe enter at the lowest point of the shooting star, and then maybe had like this is a target 1 and this is a target 2. Being that this covered so much range, that's the only thing that makes me a little nervous about trying to jump in. Those of you who are watching that are not in our community, the folks who are in my community, they know I'm very conservative. I'm looking for the highest probability plays possible. So I'm always looking to put multiple factors together before I enter a trade. I will also, this is something I recommend. Okay, so I trade off the 30-minute, but the first thing I do is I start looking at the higher time frames. This will help you from getting stuck. All right, so here we are in the 4-hour. And again, this candle won't close until 1 o'clock. So on the 4-hour, we're green, even though on the 30-minute, we're pretty big red. Okay, now let's look at the daily. All right. On the daily, we're red. Okay. Let's look at the weekly. This is a new week, so the week and the month are going to be the same. Okay, now we are on a shooting star. Look at this on the weekly. This is a Friday. Okay, now it's highly unlikely that this will change a whole lot, even if it went up to, say, like up around here, right? Even if it was up in here, it's still a shooting star. As long as the wick is 2 to 3 times the size of the body, it's a shooting star. All right, so this is a negative or bearish signal. We'll walk it back down. Then we go to the daily. This is called looking at the bigger picture. We're red on the day, right? Red on the day. We go to the 4-hour. Right now, the 4-hour is the only one that's sort of out of sync or out of confluence. It's green. Okay, but we know because we've been watching the price action what it did. It was all the way down here, came all the way up here, and then has retraced back to here. So we know that it's actually moving down right now. All right, then I can go back to the 30-minute, which is what I trade. I trade off the 30-minute. And I can see what I'm looking at, right? Okay. Now this one poked its head up. Now it's starting to work its way back down. So again, if it would clear this, now this poked its head underneath of this wick. I told you this wick is what's holding this up. You believe me now? I mean, not only is it this support level, it's this wick. All right, so even though we kind of just poked below it, you see we closed almost even with it. Now we bounced up, we're trying to come back down. So if we would take this out here, all right, the low, I'll give you some exact numbers, 29.44. So if you got the 29.43.75, you could look to enter going short with this as a target right in this area right here, okay? And you would have a nice tight stop on it. That would be a downside play that I would be somewhat interested in. Okay, I'll be going to lunch here pretty soon, so I'm probably not going to be entering any trades, but I'm just trying to give you an idea of what I would look for. Two Brown Dogs is in my community. And he goes by the name Todd Father in there. So that's what I would be looking for to the short side. Okay, right now, I wouldn't be interested in anything long. Nothing. That's me. I'm not saying you or somebody else. Okay, because right now, if I was going to look at something long, I wouldn't be looking until the top of this candle got taken out, and then I still wouldn't feel good about it. Why? Because of the structure level. And I also know how important 29.75 is. So even if this did get all the way back up here and take the top of this candle out, I'm still not interested in anything long. Not at this point. Now, if we broke up above here, then I would start looking for a reason to go long. Right? And if this candle got all the way up here, it would start changing some of those higher time frame candles appearance as well. Okay, I hope that answers your question there, Todd Father, and makes sense to you. But the only trade that I would be looking for right now would be right here, taking out the bottom of this candle, and then I would have a target. I would really have a target of 29.75. So you could even say 29.30. I always try to exit slightly before where I really think price might go, because I don't want it to get there and then catch a bounce and then you lose a lot of your profit. Right? How many times does that happen to people? So it takes this out, and that would be right there, 29.43.75, and then you get all the way down to 29.30, and you could exit right there, make $13, $14 profit, or if you're playing options, whatever your ticks gave you, and you try to hold just a little bit longer because you're trying to either get to this level or you're trying to get closer to the bottom of this wick, and then all of a sudden, boom, you get this big bounce, and price bounces almost all the way back up here, and you lose all your profit or a significant portion of it, like in a snap of a finger. So I always try to exit a little bit early. So for me, if that would start to play out, like if you took a short, like right here, I would try to exit down here around 29.30, just to be safe. Okay, awesome. Awesome. Anything anybody wants me to look at? I might wind this down before too long. There's still 11 of you on here, so I don't want, if there's something that somebody wants to see, let me know. I did, just so you guys are new, I do trade Forex as well. I actually took a little Forex trade this morning, and my trailing stop was way too big. I knew it was a little bit volatile. It was on Euro USD, and I had a 12 pip trailing stop. And at one time, obviously, I was 17 pips to the good, and then price reversed on me and stopped me out, and I got a 5 pip gain. So I guess it's better than a 5 pip loss, but I knew it was volatile, so I was trying to give it a bigger stop. And I like using trailing stops with Forex because Forex can get really volatile even in normal situations. So normally, just so you know, I'll give you my theory. Normally, if I identify something in Forex that I like, a buy signal and a trigger for me, I'm usually using an 8 pip trailing stop. That usually works out pretty good for me because I'm either scalping or day trading most of the time. And that usually works pretty good for me. If it's real volatile, I might bump it up to like 10 or 12 pips. And so that's what I did this morning. I had it at 12. So when it stopped me out for a 5 pip win, that means at one time I was up 17 pips. Because obviously your trailing stop follows you. And anyway. So just so you know, if you're new, I trade Forex as well. I trade everything. I trade ES predominantly. I trade equities. I trade Forex. I'll trade gold occasionally, but typically some sort of ETF on gold. GDX, GLD, or JNUG are the ones that I would trade most often. But yeah, I mean that's pretty much what I trade. Okay, let's see here. Okay, Tong, if I'm pronouncing that right, let me go to the 15-minute and we'll take a look. Now, I don't trade the 15-minute, so I wouldn't have seen it. I only trade off of the 30-minute primarily. I shouldn't say I never trade off of anything else. Okay, so you're asking about that doji right there. Let me widen the screen so everybody else can see it. And absolutely. So what you're asking, what he was asking is if I would have seen this, like this type of a setup, would I have went short? Yes. And I would have went short at the very bottom of the doji. Okay, so the doji low was 29.59, so I would have looked to went short at 29.5875, and I would have had this as a target and then this as a target. All right. Now, as soon as you see price start to reverse against you, if you're scalping, you just get out, especially in these volatile conditions. All right. So from, what did I say, 29.5875, you probably could have exited right here. You could have made, $10. If you're playing standard contracts, it would have been a $10 move. If you're playing options, however many ticks that would have given you to the short side, depending on what your strike was. But yes, absolutely. Okay, so strong move up into resistance, and then we get a doji, a spinning top, or a shooting star. Sometimes I don't play engulfing patterns as much as some people, but some people like maybe if they get an engulfing pattern. But if I get a doji, a spinning top, or a shooting star, after that nice strong move right up into resistance, which I also know was structure, which I also know was an important level, this 29.75. Yeah, I would have looked to go short right underneath there, and this would have been my T1 or my take profit zone 1, and this would have been my T2. And I think at some point we probably will get back down here unless all of a sudden it starts to reverse back up, but we'll see. So yeah, good question. If I don't trade this time frame, but if I would have been on that time frame, that would have been a buy signal for me right there and a trigger. So that's a very good question. I have people ask me all the time. They're like, "Don't you miss some trades because you trade on the 30-minute, and yeah, absolutely. But I also feel like I get better trades. I get more solid signals off the 30-minute than trading lower than that. So I scalp and I day trade, and I'll occasionally swing trade, but not in these conditions. I'm not swing trading at all in any kind of volatile conditions. But I feel like I get better trades off the 30-minute than I do any other time frame. Again, that's just through experience. It's just what I like. I'm not telling you to do it. If you like the 15-minute or the 10 or the 5 or maybe even the 3, I think once you start getting down around the 5, the 3, the 2, the 1, you get a little bit too much noise mixed in. Okay, so let's just look at it. Let's go to, like, say, the 5-minute, because I know a lot of people like the 5-minute. Okay, so here's the 5-minute. Let's scroll in a little bit more. Yeah, see, I don't know that I would have been excited about anything on the 5-minute. Right? I mean, here's our strong move up, but look at this on the 5-minute. That's a hammer off of a support level. But you also have the 200 right here. See, that's why I don't like the 5-minute. There's just a lot going on. There's a lot of noise. And then if I go back to the 30-minute, and we're going to look at the same exact time period, look how much cleaner that is. Look how everything flows, right? I wouldn't have tried to jump in on that hammer because the very next candle turned around and reversed. So that's why I like the 30-minute. I think to me, it gives me the best of both worlds. That's all. Okay, now you see price is starting to try to go lower here. You're welcome. Okay, all right, so there we go. I think we're just about there. I said 43, did I say 43.75? Yeah, so 43.75 would have been your entry if you're trying to scalp here. And then you'd have a nice tight stop. And for everybody, that's going to be slightly different. When I'm scalping, I'm an options trader. If I'm only in, say, one contract, I'm trying to only lose $37.50 to $50, or worst case scenario, like $62.50 or $75, something like that. In these volatile conditions, it can move on you quick. But what you don't want to do in these type of conditions is set your stop way up here. Like, some people will be like, well, I've been told that I need to set it above the wick on this candle. Well, if you did that, that's $13, $14. Okay, and your upside, in theory, if you're scalping, you're really trying to just get down right in here. So that's like 1-to-1. I don't like 1-to-1 trades. Right? I want like 3-to-1. Risk to reward, reward to risk. Okay? I want 3-to-1. I don't want to take a 1-to-1, right? Because you can't make any money. If you take 1-to-1 trades all the time, well, then you have to be right almost all the time. If you're taking 3-to-1 trades, you could be right 35, 40% of the time and still make money. You get stopped out repeatedly and just get, 3 or 4 out of 10 to go your way, and you're still making money. Now, you still want to be right as often as you can. Okay? I mean, my goal is to always be 60% or higher. If I'm really, really doing well, I might be up around 75%. But anywhere between 60 to 75%, and if I'm averaging around a 3-to-1, that's my goal, then I know I'm in good shape. Okay, now here recently, I've been taking less trades because of the volatility, but I've been getting a higher reward to risk ratio, and I've had a really good winning percentage. But I've been taking less trades in this volatility. I mean, I'm really trying to drill down on what I think are the highest probability trades, and those are the only ones I'm really interested in taking. So like last week when we had the market correction, I think I told the folks in the room, I think during the entire week, and I'm a scalper by heart, I'm a day trader, so I scalp and take day trades primarily. And so there could be times that I take 10 or more trades in a day, scalps. And I think last week I maybe took a total of around 10 trades the entire week. But I won almost all of them, and I had really good reward to risk on almost all of them. Had a couple of smaller stop outs, and that's it. So, I mean, that's, in my opinion, again, one thing about me, and if you join our community, I'm not trying to force my way on anybody. I just try to show you a simplistic way to use the basics so you can make the highest probability decisions and be as consistently profitable as you can. That is my only goal. I'm not one of these guys, and there's a lot of guys out there, they have their own way of doing things, and they say, you can't be in my community or you can't be in my room unless you trade exactly the way that I do. Well, I just don't believe that, because there's hundreds and thousands of ways that you can make money in the markets. And I know people who trade completely different than I do and make a lot of money. And I know people who trade exactly the way I do and make a lot of money. And then I also know people who claim to have these proprietary, complex trading systems and analysis and indicators and all this kind of stuff, and they're wildly inconsistent. They make big gains and they take big losses. And that, to me, that's not a recipe for long-term success. That's what we all want, is long-term success. So, okay, so as we're watching this play out right now, just checking for messages. As we're watching this play out right now, we're moving down. Okay, so somebody's trying to scalp this right down around where this candle opened up would be where I would look to exit. I'm not in this trade, but you guys asked me what I would be looking for if I was. And I told you I would have entered underneath there, and I'd be looking to exit right about there. Okay. In fact, I could probably draw a line on there for you and make it easy. All right, so right there, I'll even edit it. Change the color, make it easier to see, okay? So I'll hang out just a little bit here. Says we still got 10 people, so I'll hang out a few more minutes and we'll see how this plays out. And let's see if there's anything else going on. Let me look at a couple of things. Okay, coming back. All right, AMD trying to go down again. See, AMD has sort of been following the market. Now, overnight, right after market close last night, they kind of announced some stuff that I really felt like, and I have no feelings one way or the other about AMD as a company. I don't have any feelings about them one way or the other. But right now, with this coronavirus that's going around, all these companies are out there saying, hey, this is really affecting us, and we're telling you that quarter one and quarter two of 2020. We're just letting you know we're probably not going to hit targets. Our production's going to be way down, all this stuff. Well, AMD came out like right after close last night, and they're like, oh yeah, we don't think it's going to affect us that much. We don't see the coronavirus affecting us that much, and we think we're still going to hit targets. And in fact, we're introducing new products, and we're doing this and doing that. And after hours last night, boom, they like ramped. And then this morning in the pre-market, it kept working its way back down, working its way back down. And then you can see again, here's where it opened, this huge gap up, because that was because of them making that announcement yesterday. But to me, this action here, this shows that the market didn't buy it. The market was probably thinking like, and when I say the market, I'm talking about like the big money. They're probably like, that doesn't add up. Everybody else, pretty much everybody else in your industry and pretty much like anybody that has anything to do with producing stuff and factories and things like that, they're all coming out saying exactly the opposite. They're saying, hey, don't expect much quarter one and quarter two of 2020 because of this coronavirus thing. Our production's going to be hampered. We're not going to be able to bring out, things that we thought we were. We're pulling back until we get through this period, and maybe the second half of the year, things will be better. But AMD tried to, in my eyes, I think they tried to manipulate it a little bit by saying, no big deal. We're good. We're planning on hitting targets, and here's some new products that we're going to bring out. And so that's where this big gap up came, but I also think that's why it sold off, kind of recovered a little bit when the market had that little bounce, and now it's like selling off again. Does that make sense? So I would, I'm going to put a little alert right here. I've already got one even lower. Let me do it like that. That way, if it gets back down to its lowest point of the day, it's going to alert me. All right. Don't let anybody tell you that the markets are not manipulated, because they are without a doubt. All right. Give me a second here. I want to check something, so my screen is going to change for a second. Okay, everything's still the same. All right. Let me go back, because I have my feed up on my phone, and there we go. On my phone, the feed had stopped, and I wanted to make sure that it hadn't stopped for real, and it hadn't. It still says that we're streaming and that we got 11 people. And okay. All right, so you see what price action is doing. It got as low as 29.37.25, kind of come back up. Okay, now we're going to see, is it going to be able to push down again? All right, I don't think there really would have been any reason for anybody who tried to get into the trade to be stopped out yet. Even if you were conservative, I would say probably somewhere right underneath the 20, right up here, right up in there is probably where I would have a stop if I was in the trade, which I'm not. I'm not in this trade, but just trying to give you where I most likely would have had my stop. I would still be looking at this right here as a profit target. Now, let me give you another bit of advice. Let's say that this gets down like right in this area, like right in here. That's 29.3350 basically. If it got right down to here and then it sort of like stalled out, and what I mean by stalled out is you can generally look somewhere and see the bid and the ask and see the numbers. And usually if it's moving down, there's going to be an imbalance that way. Or if it's moving up, there's going to be an imbalance that way. What I mean by stalling out is they sort of equalize at a certain level. And if they stay that way for a little bit, I would probably exit, because then I would get worried. If I got down, like I said, if I got down like that close to my target and that happened, I'd probably just exit right there and lock in whatever profit I had. And I wouldn't let it go back the other way. But if I would have been in the trade, I'd still be in it at this point. Again, my stop would be somewhere just below that 20. This is the 20 simple moving average. That's where I would have placed mine. You see what happens. It comes down and it goes back up. It goes right back to this resistance level. It goes down, comes back up. There it goes again. See? Got down to about here, goes back up. So we got about 1:40 to go on this candle, and then a new candle will start. Now, if it ends up as a doji or a spinning top, to me, I'm just saying to me, I would still think that the move to the downside is still in effect. Because you would look at that as sort of a resting candle of this. This is considered more of a wide-ranging candle. So with this one here, okay, what makes a wide-ranging candle? Like, see this one, this one. Typically, if they're about 3 times the size of an average candle on your screen, you consider that a wide-ranging candle. So when you get a wide-ranging candle, and if you end up with a doji or a spinning top and it's, you know, kind of right in this area here, typically, I'm talking about probabilities here, that's just a resting candle, and then the move will continue. All right, got about 30 seconds on this candle. Okay, so you're asking, I never trade the 1 minute. Never. I don't. I know people who do. Way too much noise. I just don't like trading the 1 minute. So you're asking, is it useful or insightful? I mean, in my opinion, no, but that's just me. I'm not telling you not to use it. I mean, if it's something that you've had success with in the past, I'm trying to think if I don't know that I know anybody personally that trades a 1 minute. A few of the professional, when I say professional, I'm talking about people who do it for a living, traders that I know. I think about the shortest I know of anybody, and I'm talking about professionals. I know one guy who uses a 3 minute. And he only uses it at like actually, I take it back. I think he uses a 2 minute, and that's only at market open. That's it. So for like the first 10 or 15 minutes of market open, he uses a 2 minute. Then he switches over to higher time frames after that. So I'm just not a big fan of the 1 minute. As I've been, kind of articulating here, I like the 30 minute. It's what I keep on my screen most of the time, unless I'm reviewing information about a trade. Then I'll go to the monthly, the weekly, the daily, the 4 hour, get the overall feel. I'm looking for confluence. Are all the higher time frames moving in the same direction? And if they are, and I'm looking to take a trade in that direction, then that gives me a lot of confidence. If there's some conflict, then I look to see what type of conflict. All right. So let's just say out of those 4 time frames I gave you, that 3 were red and 1 was green, but the one that was green was a shooting star, and the other 3 are red. Well, then that's still technically confluence, because the shooting star would be a bearish signal, if that makes sense. But if 3 were red and one of them was a wide-ranging green candle, then there's conflict there that I would want to kind of dig into a little bit deeper, right? So I'll give you a scenario. Monthly's red, weekly's red, daily is red, but maybe it's a spinning top, or maybe it's just slightly red, and then the 4-hour candle is a wide-ranging green candle. Well, that's the most recent price action, and a 4-hour is still considered a higher time frame. So if I was thinking about taking a short trade there, then I'd be a little bit leery, because I would be, okay, you know, the 4-hour is a wide-ranging green candle. Everything else is red, but that would make me nervous. Okay, just trying to give you some insight into what I think. See, we picked up a couple of people here. If you're new, give us a thumbs up, please, and remember to subscribe to the channel. Turn on the notifications bell. And we do these live streams. We just started this week. We're going to be doing them every Tuesday and Friday during regular trading hours. And for now, I asked the question last time, and the comments I got back where people were saying, you know, maybe slightly after market open, maybe not right at 9:30. So I think I'm going to try for the time being on Tuesdays and Fridays to get going right around 9:45 a.m. Let that first 15 minutes or so play out, and then, you know, be on for a couple hours after that, and then, you know, wrap it up for the day. So, okay, so here we go. As I've been talking here, here's our candle, right? What did I say? Okay, I said if we ended up as a spinning top or a doji, then it would be highly likely that this candle would continue the same pattern as this candle. Wide-ranging red candle, we got a spinning top, and it's continuing on down. Okay. You're welcome. Tong, you're welcome. And Othman, if I'm pronouncing that correct, Othman, yes. Amplifies your feelings too much, right? Those lower time frames, like the 1 minute, the 2 minute, the 3 minute. Sometimes I think the 5 minute is, if I was going to play a short, what I consider a short time frame, it would probably be the 5 minute. I don't like to go much lower than that. Like that one gentleman that I told you only plays the 2 minute at open. That would be the only reason I would play like a 2 minute or a 3 minute is market open. That's it. That's absolutely it. But I don't really. In my community, I try to tell my traders, try not to trade the first 5 to 10 minutes of market open. Even if you feel like you've got a pretty good idea of what's going to happen, because they manipulate market open just like they manipulate market close. I tell my traders, try to avoid the first 5 to 10 minutes of market open. Try to avoid the last 15 to 30 minutes of market close, unless you're buying a stock or an ETF or something for a buy the close, sell the open trade. Okay, that's the only reason I would be trading into the close, because it gets manipulated again then. A lot of whipsaw back and forth, right? And for retail traders, they get all emotional and they think it's going their way, and then it goes the other way, and then they jump out, they lose money, and then it turns around and goes the way that they thought it was going to go. Some of them will jump back in and lose more money, right? That's why I tell my traders, just don't mess with that. Just don't mess with that. Okay, we're getting closer, right? Getting closer to our target. Now we're getting into that area where I said, like, if we got down close and we started to stall out. Now, I don't think we've stalled out quite yet. But if we started to stall out down there, I would just lock in profit, right? So if I was scalping, yeah, I'd probably lock in myself, because we got close enough. We got closer. I mean, we're probably going to get here, but you don't want price to all of a sudden bounce way back up here. So I'm just telling you my mindset. If I would have been in that trade that I just walked through with everybody, Right about here, I probably would have exited it, as we've kind of been bouncing, stalling right here. See that little bounce there? Because by now you should be very nicely green and you should just get out, right? You'd already be about $10, $11 to the good from where we would have entered. Remember, we entered over here. 29.43.75. That would have been the entry. And so if you would have got to 29.33.75, that's $10. That's 10 bucks. All right? Don't be greedy. Now, are we going to get to my blue line, which is the target? We probably are, but I know if I know I can lock in $10 worth of profit, and I play options, so it'd be however many ticks I got for that 10 bucks, I'd rather lock that in and just be absolutely sure than try to squeeze out, another dollar or two or whatever. Because I guarantee you, and you guys know this, I know you're going to be shaking your heads when I say this. For every time that you held on and held on and held on when price started stalling out, and then it eventually got where you went, for every time it does that, at least 3 times it went against you, and you either lost most of your profit or lost all of your profit and went from green to red. So just don't be greedy. Okay, awesome, Othman. I just saw your comment. Okay, I'm just waiting to see if we end up hitting the target here, and then I'm going to jump off there and go to lunch if we do. But you see what I mean about stalling out right now, right? So now for about the last 5 or 6 minutes, we've been, okay, the lowest was 29.31.75, and then up to about 23.75. We've kind of been in that $2 range for about 5 or 6 minutes. Just going back and forth, back and forth, back and forth. When I see that, when I'm in a trade, when I'm scalping, I just lock it in. Lock it in right there. Way to go, Robert. Robert got $8. Nice. Nice. It's exactly what we want. So Robert, I take it that you've already exited then. You exited when price started to stall out. That's what I'm taking. Okay, here we go. It's making a push. Okay, we know where we need to get. The blue line. The blue line, what did I say it was, is 29.29.75. So just say 29.30. We've been down to 29.31 so far. There you go, Robert. That was smart. And then once a trade is over, you just let it go. So let's just say, because this happens to me a lot, let's just say price stalled out up there. I exited. I lock in my profit. I make my 8 or 10 bucks, just like Robert just did. And then all of a sudden, price just blasts on down, like goes straight and ends up somewhere down in here. And you could have like doubled your money. You know what? I don't care. No FOMO. No fear of missing out. When you're out of the trade is over. So you shouldn't care whether it comes way down here or reverses way up there. You made your money and you move on. You look for the next high quality trade. Okay, so Othman, you're asking me, do I place my targets based on targets or time or both? Both, meaning it just depends on what's going on. There we go. We just hit it. I saw it. Sorry about that. Actually, we got within 50 cents. The low is 29.30.50. 29.30. There it is. There it is. We hit it. Okay, so we would have hit our target. I'm going to come back, Othman. I just want to point something out real quick, and I'm going to come back and answer your question. Okay, so look what I had said. Clear back over here when this candle started to get ready to close. Okay, we had wide-ranging red candle. Then we ended up with this range here. But I said if we end up in either a doji or a spinning top, technically this is a spinning top, and it's in the upper, excuse me, in this case the lower 25 to 30% of this candle, then it's highly likely that this candle is going to continue in the same direction of this candle and probably close to the same magnitude, give or take. Okay? That's a scalping technique. All right? Some people call it the 3-candle pattern play. Some people call it a 3-bar play. But you have to have it set up correctly. We came off of a reversal here. So this is early in a move. These work better early in a move. So what do I mean about early? We had a strong move up. We rejected. And now we're starting to move down. So we're early in the move. These typically work better early in a move. It's not that they can't work in the middle of a move or later. It's just that I like probabilities, and we play high probabilities. This was a high probability trade. Okay, so I told you, going all the way back over here, if we broke, going back over here, if we broke the low of that candle, that's where you enter. My stop would have been just up here underneath of the 20. So even though we came back up here a couple times, we pushed down, we came up, pushed down, we came up. We never got close to the stop. And if we would have got stopped out, we wouldn't have lost much. And then this third candle here, bam, took it right on down to this next level at 28.50, but we would have exited at this blue line. Right? Because look at the bounce. You see what I'm talking about? When it hit this level, it bounced back up about $6. So if you're in that trade, then you lose all that profit. That's why I say exit early and you avoid these bounces, because they happen all the time. Okay, so now back to answering Othman's question. Okay, so he asked about my targets. Are they based on like actual price targets or on time? And I said both, but I'll give you my reasoning. So when I'm scalping, I'm looking for physical targets, price targets that make sense. So I just gave you one, and I gave you all the reasons why. Okay, and it played out exactly the way we thought it would. And then when I do it from a time perspective, I'm an options trader. So time is your enemy when you're an options trader. And I scalp, mostly, scalp and day trade. So if I'm in a scalp and it's not going my way, 45 minutes to an hour into the trade, I'm probably just going to exit because time is going against me. Okay? Same thing, like if you're in a day trade, I was able to point this out in the room. This has been weeks ago now. There was a day back before we had all this volatility where ES moved up the entire day. Like just a nice 45-degree angle the entire day. But never did it ever take very many big moves. Okay, these were small candles just kind of moving up the entire day. At the very beginning of the day, I looked at what a certain option strike was and what you could have bought it at. Price moved up. I can't remember the exact number. Let's just say it was $15 from open to close. Never had any big swings. I mean, just this nice steady melt up is what I would call it because it was melting your premium. And it moved up about $15. At the end of the day, if you would have bought it open and held all the way through the day, even though price moved up like $15, you would have made $50. That's it. 50, because of the premium melt throughout the day. So if you're an options trader, time is your enemy. When you're trading options, you're looking for these bigger moves like we just had right there. You're looking for something to happen quickly. Now, if you're buying standard contracts, or if you're buying equities and you're buying shares, you don't have to worry about that as much, right? Because you can kind of hold on to it and it's not really costing you anything to hold on to it. But when you're trading options, you have to take time into consideration. Okay, Robert, the blue is my 20 SMA. The green is my 200 SMA. 20, 200. Okay, so now, okay, what I'm looking at before I get off of here is if price breaks and holds this level, the 29.2850, the next thing we'd have to get through is the low of the day, which is 29.0625 right here. Then if we got through that, then the next support level is at 29.9850, and the next level below that is 28.8350, and the next level below that I believe is 29.60, 29.6025. So that gives you targets to the downside if we break and hold this level up here, and then can get under the low of the day and make a new low, which would be what? Another lower low, lower high, lower low that continues our downtrend, right? Continues our downtrend. Okay, trying to break below it right now. Trying to break below it right now. All right, so before I get off, give me a second here. Wanted to go back and look at AMD again, see what they were doing. Okay, still moving down. See, still moving down. This candle here catching a little bit of a bounce, but their next level down isn't until 45.83. So just like the market, okay, it's moving similar to the market. Just like the market, if it breaks its low of day, it could really start to flush, right? So if it would break here, which was 46.82, oh, I'm sorry, 46.81. I should have put this a little bit lower. So it needs to break 46.81, and if it does, there's a really good chance it just starts to flush. Because the next support level is down here. But this shows us what? What does this wick tell us? Tells us that right here, this morning, when it flushed this morning, this is where some buyers got aggressive and thought, okay, this is a value, and they bought it back up to here, but now it's selling off again. So this is the critical level right here for AMD, just like the market has that 29.06 level, which is the bottom of the wick in the market, and if it gets here, it would probably just flush on down. Othman, you're absolutely welcome. Thank you for being here. Okay, trading with leverage. I don't have a problem trading with leverage, and obviously different instruments offer different leverage, so it's hard to answer that question definitively. Like, let's take Forex here in the United States, and I don't know where you're located, if you're here in the U.S. or if you're in another country. Here in the U.S., they cap Forex leverage at 50 to 1. And that sounds like a lot, but obviously people who trade Forex know that in other countries in the world, they trade 100 to 1, 200 to 1, 400 to 1. I think I've even read where there's some places you can get 1,000 to 1 leverage. I would never recommend trading with that kind of leverage. You can get yourself in big trouble in a blink of an eye. But with normal leverage, so like say equities, again, most accounts here in the United States, if you're trading equities, they might offer 4-to-1 leverage. Okay, I think that's perfectly fine as long as you know what you're doing and you have proper risk management. No issues there whatsoever. Again, outside of the U.S., I have no idea what the leverage capabilities are. So you said what would be a maximum? You know, I think 4-to-1 is probably good if you're trading equities. And then on Forex, if again we're capped at 50-to-1, I probably wouldn't myself. I probably wouldn't want to go over 100-to-1. If I can't do it here in the U.S., but if I had the ability to, I still probably wouldn't want to go over 100-to-1. But that's just me, personal preference. And you're asking my opinion, so that's my opinion. RJ, I see your comment. TLT up 5%. I saw people talking about TLT yesterday. Okay, and before I get off of here, you notice that we're still struggling right here at 29.2850. We go down, we touch it, we bounce. We go down, we touch it, we bounce. Okay, you can look at that a number of different ways. Robert, glad to have you. I'm getting off here in about 2 minutes myself, so I'm glad you were here. Thank you so much. You're quite welcome. You can look at this a couple of different ways. Some people might look at this and say, well, maybe we're about to reverse because we can't get through it. We keep coming down and bouncing back up, keep coming down and bouncing back up. The other school of thought is the more times we bounce, we come down and bounce, eventually we're going to break through. And if we break through and hold, real quick lesson here on candlesticks, even though these are long wicks, I want you to think about something from a common sense perspective. This shows us that buyers got aggressive and they pushed price up in every one of these candles. Where do you think they put their stops? Right? A lot of them would put them right underneath each one of these wicks. So if you can get through here and you get just below this wick, you start taking out their stops. That might give you a little bit of a bump. If you get just below here, you start taking out their stops. Now here's the big one. If you could get below here and start taking out stops there, you could really see the market start to flush. Okay, this one would be the challenge. This would be the big challenge. But I was showing folks in the room the other day on live audio, or actually I might have been doing it on the live stream. You can see setups. I was telling them how you can somewhat predict when you're going to get a bigger candle, and I'm trying to remember where it was. It's kind of irrelevant right now. I think it was right here. So we started that this candle opened up down here, and I had talked about it like 30 minutes, an hour ahead before it even happened. But I was just trying to tell them how you can start to look at a big green candle or a big red candle forming and the magnitude of a move where you get these big moves. And then it played out like right after, about a half hour after I was done talking about it. But when you get a nice smooth transition like this, you really want to see these like small to medium-sized wicks lined up in a diagonal. You start taking this one out. I'm almost positive this is where it happened. You take this one out and it bumps you up here. Then you get up here, you take this one out and it bumps you up even more. Then you take this one out and then you get up here. And then you take this one out and you see what happened? Look at the move. And it just accelerated and it ended up going all the way up here. That's how you start to get these really aggressive moves forming. Now that's It's a little bit more complex candlestick analysis, and we're going to get into that kind of stuff, especially in the premium part of our community, because there's a lot about candlesticks that people don't understand, and that's just one thing. That's just one thing. So, Othman, I'm reading your comments there. There you go. Okay. Yeah. Hey, again, whatever you're comfortable with the leverage, that's good, right? That's good. So usually 50, you're usually at 50 times leverage, but right now 20 to 1. I think you're right. You know, with this kind of volatility, better to be safe than sorry. Okay, so anyway, I'm going to jump off of here, but again, if we can get down and take out the bottom of this wick here, we could maybe see the market try to flush, but this one is the big one. They would have to get under here, and if they got under here, then it really opens up a whole new world. Let me squeeze this in. Give me 1 second here. I have to go to a higher time frame. Okay, so here we are in this 4-hour candle, and the bottom of it is that 2906. This candle closes at 1 o'clock, and as you can see, it was green when we started this. Remember? It was green way up here, but we were slowly working our way back. Actually, it was green clear up here. I take that back. It was clear up to 29.75, and then it kept slowly working its way back. Well, look where we are now. We're back to a doji, right? So we've pushed, sellers have pushed it all the way down here. If we take out this low of day, then we could flush definitely probably to 28.8350 and maybe all the way to 28.6025, which is this level here, and outside chance of getting clear down around 28.55. That's the bottom of this wick, right? Look at all these wicks over here. Okay, see the diagonal shape over here? You start taking stops out, even on a higher time frame, it accelerates price movement. Okay, well, everybody, thank you so much for joining. Again, I appreciate the thumbs up, subscribing to the channel, clicking on the notifications bell. We'll be doing this every Tuesday and Friday, starting approximately at 9:45 a.m. And if you want to learn more about us, go to simpletradinglife.com. Click on the free chat room button. You can join us, join our community. We're just everyday people. I keep everything simple. We try to teach simple, basic analysis, trading strategies, charting techniques. No big fancy words. Nobody has any egos in our room. We're all just trying to help you become more consistently profitable. So hopefully we'll see you in the room. Thank you so much for joining us on this live stream. We'll see you later.